Hello friends, welcome to Finance Guru. Today in this video we will learn about the differences between new and old tax regime. We are in April, that is the beginning of the financial year, where you should decide and go with the tax regime which suits your income, which suits your investment, which suits your asset allocation. So let's directly dive into the differences of the tax rates in the beginning of this video. In the later part, we will view about what are all the exemptions which is available in the old tax regime, what is the exemption which is available in the new tax regime, and we will get into the income tax calculator to directly put our numbers, put our hands on the numbers and decide on which tax regime would be beneficial for each individual. So, in this particular picture which you are viewing now, there is a difference of two tax rates here. So, in the left hand side, you can see the income tax slab in the new tax regime. It is starting from 3 lakh rupees up to 3 lakh rupees in the new tax regime. Absolutely no tax. If you are drawing 3 lakh rupees of taxable income, if your taxable income is below 3 lakh rupees, absolutely there is no tax. When your income, when your taxable income falls between 3 to 6 lakh in the second line, which you can see, you will be paying 5.20% of the total of the taxable income. Thereby, the tax slab just increases every 3 lakhs. 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 to 15. After 15, it jumps 5 lakhs once. 15 to, sorry, after 15 to till 50 lakhs, it's 31.20%, wherein because after 50 lakhs of the taxable income, surcharge is applicable. You can see a drastic change here after 31.2%. For above 50 lakhs taxable income, the tax rate charged in new tax regime is 34.32%. When we come to old tax regime, in the right hand side of the table, so up to 2.5 lakhs, the tax is nil. From 2.5 to 5, it's 5.20%. It is always same when compared to the new tax regime in the left table. So from 5 lakh to 10 lakh, it's 20%. It's huge, right? So in a new tax regime, you will be paying less tax, where if you fall in the bracket of 6 lakh to 9 lakh. But even in the old tax regime, you will be paying higher taxes when you come to 5 lakh to 10 lakh bracket. That's 20%. That's just 10% in the new tax regime. However, I'll explain the differences later. From 10 lakh to 50 lakh, it's 31.20%, and after 50 lakh surcharge is applicable, the tax rate increases. In the old tax regime, the highest rate is 42.74%. I know it's not very easy to get the context of this table, so I'll just move on to my next part of the video, where I'll explain which is the exemption available and which exemption is not available under which tax regime. So here is the deduction type and existing tax regime. That is old tax regime, and in the extreme right, it's the new tax regime. So standard deduction for 50,000 rupees. It's there for both old tax regime, whether it is your taxable income is below 5 lakh or below 7 lakh. Both the tax regimes have the standard deduction. After deduction, standard deduction only, your tax calculation begins. So professional tax is just 2,400. I'll just ignore this. Exemption under section 10. Most of us will be claiming the house rent allowance, which is under exemptions under section 12. Section 10, which is present in old tax regime. You can claim HRA. You can submit your rent receipts and get the HRA exemption in the old tax regime, whereas in the new tax regime, it's not allowed. Children education allowance, yes, it's allowed in the old tax regime, not allowed in the new tax regime. Leave travel allowance. You'll travel with your family for a trip, and you come back and claim the travel expenses and get your amount tax free. That is allowed in the old tax regime, but in new tax regime, that's not allowed. So uniform allowance, I'll just skip all these things. Mm, yeah. Coming to the main part here is the housing loan income. Those people who have housing loan will get benefited if they are only in the old tax regime, if their taxable income is less than 15 lakh rupees. I repeat again, if people with taxable income less than 15 lakh, and if they have the housing loan, they will get benefited in old tax regime but not in new tax regime. Again, please do your own research before just blindly opting for the tax regimes. Interest on housing loan, you will be paying interest on your housing loans that the maximum allowed is 2 lakh rupees per financial year. You can just claim that and reduce your taxable income up to 2 lakh rupees. Loss from house property, this also you can claim under old tax regime, not available under new tax regime. Income from house property, income let out, if you have given your other residential property, if you have let it out and you're gaining income from, then there also you can claim the exemption. Interest on housing loan, additional exemption under section 80E, 80EA. You can also claim this. There are multiple rules regarding this 80EE. Please go to Google and you will find it helpful. If you purchase your home between 2014 to 2019, etc., etc., there are so many rules. You can just go ahead. So coming to the chapter 6A deductions, medical insurance premium. We all pay medical insurance premium for ourselves, our spouse, or even for our kids. So it is also the exemption is also available in the old tax regime, not available in the new tax regime. If you just refer the new tax regime column, everywhere it says no, 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 no. Okay, deduction towards handicap dependents, yes, in old tax regime. And yeah, uh, interest on deposits in saving banks account for 80 TTA up to rupees 10,000 rupees, that's allowed. Interest paid on education loan, few people will have to take the education loan and they'll start repaying after they get the job. The interest which is paid on the education loan, I'm telling it again, it's not the principal part of the house, the principal part of the education loan. It is the interest part of the education loan which is tax exempted always. So this is about this chapter 6A. And one thing before moving on to the section 80C, it's employer contribution towards NPS. It's if your employer decides, gives you an option so that you can contribute to the national pension scheme, which is a central government scheme, saying like PAN number, you will be allotted PAN number, permanent retirement account number. So you can just contribute 10% of your basic salary towards NPS and get the tax exemption as well in the new tax regime. It's available in the both tax regime. So coming to the section 80C, which is most popular among the Indian taxpayers, the maximum benefit allowed under this section 80C is just 1.5 lakhs. For the for the newbies and new people joining the workforce, they'll have very minimum amount in their PF contribution, that is employees provident fund. Yes, it is, the deduction is allowed in the old tax regime, not in the new tax regime. Voluntary provident fund, if you just decide to invest 2,000 3,000 rupees per month into the same PF amount, where your 12% of PF is being given, you can, that also matters for the 80C deductions. Public provident fund, you can invest 1.5 lakh rupees for financial year and claim the exemption here under old tax regime. Children education tuition fee, national saving certificate, you can take it from any of the post offices. Life insurance premium, whether it is an term insurance or the life insurance, you can just go ahead and claim the exemptions for this. Housing loan principal repayment. Earlier, while mentioning the about the interest part of the housing loan, I said that up to 2 lakh rupees you can claim the interest. Here in the deduction under section 80C, you can claim your principal part of the housing loan. Remember, when you are paying your EMI amount for your housing loan, the EMI will have two components. One is the principal component and another one is the interest component. Interest component will always be huge in the beginning of the housing loan and it goes on reducing. as on you begin to pay your EMIs. So the principal part of the housing loan can be claimed under section 80C only in old tax regime. So Sukanya Samriddhi scheme, if you have a girl child, you can just go ahead and invest some amount of rupees and gain the exemption. Accrued NSC interest, mutual funds or ULIP, mutual funds which has the lock-in period for uh, 3 years, which has to be given by the AMC, the proof to be given by the AMC, so that you can just go ahead and claim. It's popularly known as Equity Linked Saving Scheme, ELSS. You might have heard it so many times. So here it is mentioned as mutual funds. Deduction under life insurance, pension scheme, employees contribution to NPS. It's also allowed under the section 80C, senior citizen saving scheme, tax saver deposits of 5 years, and investment in infrastructure or tax saving bonds. So if you clearly observe, all these ATC deductions are only available in the old tax regime. You will not get any other exemption in new tax regime other than your NPS contribution, employer's contribution to NPS, and if your employer provides you with some of the car lease programs or any telephone reimbursements, only those things will be allowed under new tax regime. But still, why should we go for new tax regime or the old tax regime? So we will straightly head towards the income tax portal, where we can just put in our numbers according to our needs and decide on which tax regime should we opt for the financial year. Before going to the income tax website, I suggest all the viewers to align your investment objectives, to align your long term and short term goals along with the investments details. If you are opting for the new tax regime, anyway the government is not going to consider any of the investments. No point in aligning your tax planning with your investment goals. But if your income is less than 15 lakh and 15 lakh or 10 lakh, and you are going with the old tax regime, claiming the ATC benefits, claiming the interest on housing loan, or interest on principal part of the housing loan, it is very essential as a middle class people. We should align our investment goals. Let's say you have an investment goal to invest rupees 50,000 of your money into the mutual funds or the ELSS. So instead of putting it in the random mutual funds, you can put it into the ELSS fund, which gives you an gives you an handsome returns after passing the inflation rate of around 6 to 7%. You will get real rate of return maybe up to 4 to 5%. So please do not take it as an investment advice. Please do your research before putting in your money to any of the uh, market instruments. So a main point which I was trying to explain here is to align your investment goals to your tax planning. In HRA you cannot do any investment goals. It's not an investment; it's an expense. If you are paying the rent for living in the house, right? It's not an investment. But regarding the ATC, right? In the ATC there is employee provident fund, there is public provident fund, there is ELSS. We talk about asset allocation so much, wherein 50% of your assets should be in equity, 50% of the assets should be in the debt part or the fixed income part. So you can decide on the asset allocation. If your age is younger, put more money into equity. If you're going to retire, if you're in the retirement age, just move your funds more towards the secured income, fixed income, so that you can just plan your taxes in the beginning of the financial year, and not let your employer deduct more tax in the beginning of the financial year, so that you do not have some shocks while you get your salary in the on the month end. So let's dive into the income tax website now. So this is the e-filing website where you file your income tax returns every year. So this is April, and we should file the returns for the previous financial year, that is 2023-24 till July 31st. Income tax department allows you to claim the submit your ITR returns. So For the purpose of tax calculation, for the comparison, I'm in this income tax calculator. You can just go to this website e-filing, Income Tax Department, Government of India, and find this tax calculator. So for the assessment here, I'll just select I'm an individual, I'm a resident of this nation, so I'll select resident. I'm below 60 years of age, and I'll mention my annual income is 12 lakh rupees. Okay, so let's assume I have completed my ATC investments of 1.5 lakhs, and I'm investing rupees 50,000 in national pension scheme, and around I'm getting the so that becomes 2 lakh rupees, and another 1 lakh rupees for interest on housing loan, that becomes 3 lakhs, another 1 lakh rupees for the HRA exemption. So I'll put 4 lakh rupees. You may wondering that how can I claim both HRA and the interest on housing loan? If your rented house and your self property is in different cities, you can always claim both HRA and the interest on housing loan. So I'll put total deductions as 4 lakhs rupees here. So it's an there is no calculate button here, it's an automatic calculation. Here it is giving me the tax summary. You can find it in the right hand side here, but it says the total annual income. Here the annual income refers to taxable income. Okay, so the deductions which I said earlier, the interest on housing loan, ATC deductions, HRA, all including, it is coming to 4 lakh rupees. So it says as per the old tax regime I should pay the tax of 75,400 rupees. But as per the new tax regime, it says to me I should pay 93,600. So it is saying that you save 18,200 rupees if you opt for old tax regime based on the information which I have entered here. If I say the view comparison, so it is giving me the comparison here, which is just the representational data here. The tax amount is slightly higher in the new tax regime. Okay, so I'll just close this window, and I'll say my deduction are just 1 lakh rupees. I'm a lazy fellow. I do not invest anything. I just enjoy my money after getting salary. So after getting salary, I just enjoy my money. I do not invest. I have only 1 lakh rupee left to invest. That too I have not invested it. So assuming that my annual income is, my taxable income is 12 lakh, and my only investment I'm doing is for only 1 lakh. So considering this, taxable income is 12 lakh and my only investments are for 1 lakh, for 1 lakh rupees. The tax amount in the old tax regime is slightly higher, 1 lakh 48,200, and the new tax regime it is lesser. So when you do not have sufficient investments, new tax regime will be beneficial in the first go. So if you have an other income from your capital gains, let's say you have sold your mutual fund units, or you have made multiple profits with the stocks trading, and you have gained some income, the taxable income, that long term and short term capital gains also gets added for the total tax liability. So it's not that it is only the new tax regime is beneficial or the old tax regime is beneficial. It is unique to each individual. So do your own math, come to this website, have your investment plan, have your tax planning in place, get your asset allocation in the proper way, so that you can just go ahead and tell your employer that which tax regime you should be choosing, and so that they'll deduct the tax, the TDS, based on the declaration you make. And at the later part of the financial year, they'll ask you to submit the investments proof, which of course you should be providing. If you do not provide your investment proof, they will deduct the tax and remit it to the income tax department. So instead of again coming to this website and filing the returns and waiting for the income tax department to give back our tax money after making investments, instead of doing all that, please plan early, please be smart, and please be aware of the tools which is there in the income tax department, so that you can plan it early and execute your tax planning in the beginning of the financial year itself. Guys, thank you for watching this video. If you find any value from this video, Kindly subscribe to this channel for more and more useful information, and share this video with your friends and family, which whom may also find it helpful. So once again, thank you. Please do not forget to click the subscribe button and the bell button. Thank you a lot. See you all in my next video.